Howdy there, folks. Welcome into today's video. Very serious video here today. I just sold out of a stock completely in the public account. I want to tell you what stock that is, why I made that decision, if I still hold shares of this stock in other portfolios, and what's my plans moving forward with that one. We're going to speak about what stock I bought with that money, the proceeds, and why did I go ahead and buy that stock with the money from selling this stock, okay? Then we're going to speak about why this was actually an easy risk-reward profile here in terms of kind of a decision in terms of selling the stock and putting the money in this stock. Both these stocks could be seen as riskier stocks, right? But at the end of the day, one had far less risk in terms of downside and far greater upside potential. And so we'll speak about all that. And this was in the public account here today, which public account, I started this portfolio probably about 6 years ago, roughly or so. We're pushing close to $1.8 million on this portfolio. It's a very stressful portfolio to run because everything's public. I've been making all the moves public in there for, since I started the portfolio inside the private group, right? Very stressful to obviously run that portfolio because there's always a lot of questions. But the way I look at it is it's good practice for me personally in terms of, if I can't invest my own money publicly and be comfortable with people seeing all the moves I make and things like that, how will I ever do a hedge fund, right? Which I think I'll be the best hedge fund manager in the world. And I'm 100% convinced of that when I go ahead and go that route, right? But that's a whole different ballgame if you're taking people's money and investing it for them and you're running a hedge fund, right? So I've got to feel comfortable investing at least my own money publicly and people being able to see all the moves before I ever take anybody else's money to invest for them whenever I decide to go down that route, which probably is still a long time away in regards to kind of me going there, right? So yeah, let's go ahead and get into this, guys. I hope you enjoyed today's video. I hope you get a lot of value out of it. It's not a subject I like to speak about in terms of selling a stock, but it is something that happened. So what did I go ahead and sell? Why did I sell it? Why did I buy another stock with the money? And what's the risk reward profiles here? Okay, well, the stock I sold is Honest. So Honest is the stock I sold here today in the public account. I held still 28,000 shares of Honest in that portfolio overall. Okay, pretty simple decision for me. Here's the deal with Honest, okay? There's just a few bad things with this one. It's a lot. First off, they haven't shown any improvements in margins. Any improvements. Like, margins are still crap. Gross profit actually went down last quarter. That should not be happening. With how much transportation cost alone has come down, there's no reason this company should have gross profits going down. And they did, okay? They've cut down on marketing immensely over basically year over year. They cut down over $3 million here, which at the end of the day, if you're going to cut down on marketing, that could hurt your business long term. That could, okay, in future quarters, right? And their operating loss still, despite cutting on marketing, which could be a questionable decision, their operating loss still grew quite substantially to over $13 million versus $10 million this time last year, which was way too big of an operating loss, right? Net loss $13 million versus $10 million in the same quarter last year. At the end of the day, when it comes to Honest, this just isn't a company that's shown any improvements in margins, any improvements in profitability, and it's extremely concerning, okay? Extremely concerning. How does a company go bankrupt? There's really two ways on how a company goes bankrupt. One way is they just have too much debt. They keep piling on the debt. They take bigger and bigger losses over time, right? Because essentially they're having to pay down this debt, but they're whatever they're making for profits, if it is a profitable company, it's going straight to the debt. And so it's just a horrible situation where the interest is just killing them on their debt loads. The other way a company goes bankrupt is if their margins continue to go down and their losses go up, right? As a perfect example of that was the Chef, right? The Chef, their margins, they just couldn't improve their margins. They just kept getting worse and worse and worse, and the losses kept climbing for the company. Now, the Chef also had a trifecta where simultaneously then their revenue started to go down. So yeah, you add on revenues going down on top of margins going down and losses going up, you can pretty much, put yourself in the coffin in that situation. That's obviously what happened with the Chef there, right? Now, in regards to Honest, it goes even deeper and further than just a situation around the financials, which are really troubling. They brought in a CEO, Carla Vernon, obviously the beginning of this year, end of last year, kind of, right? And Carla, she posts so much of this. It's just getting a lot of people frustrated because here's the deal. Honest is fighting for their life as a company. The company's down to like $18 million of cash as of last quarter, and they just took a $13 million loss in the last quarter. So they're fighting for their life. And meanwhile, you have Carla, people are just getting fed up with this. She's posting this at Honest, diversity, equity, and inclusion, or all these things. And, people are like, how about sales and margins? that's the type of stuff that's really rubbing people the wrong way, because we're not dealing with, this isn't Apple, okay? If Apple wants to talk about diversity and inclusion, all this stuff all the time, they can. But when you're a company, here's the deal. How much diversity and inclusion and all this stuff are you going to have if your company's bankrupt? Zero. And so people are just getting fed up with this stuff, right? Look at this. I'm not really liking Carla. I have no issue with her standing, advocating for whatever she wants, but post about Honest and their products. She's very active on social media, but never, like posting about Honest or anything like that, right? She's posting about other stuff. And it's a very frustrating ordeal. And I even, got fed up with this back in May. She had posted on social media, it was about 3:30 in the afternoon on her Instagram story. She posted on a Monday that she was taking down Christmas lights, okay? I don't know if that was pre-recorded or if she was actually taking down Christmas lights at 3:30 in the afternoon on Monday, but that was extremely frustrating. I mean, this is a company fighting for its life. We don't freaking care that you're taking down Christmas lights. This company's fighting for survival right now. It's a very serious matter. And it's not a Christmas light matter, right? I got so frustrated in this whole ordeal, right, that I actually sent the investor relations an email wanting answers. I've been in the market 15 years and investing in individual stocks for 15 freaking years. I've never remember having to send the investor relations an email frustrated with the CEO and wanting questions and demanding answers, okay? So that just speaks volumes to kind of the frustration there. And then they bring in the CFO that comes from another failed company that's about to start it Honest. And it's like, come on, man. Like, are we serious? Okay. So do I still own Honest stock? And what's the plan with Honest stock moving forward? Okay. So obviously in terms of the public count, I own no Honest shares. Now I do own it in two other portfolios though. One is another big dog Fidelity account. And then I do own Honest shares in the Patreon portfolio as of right now. Will I own Honest shares in the Patreon portfolio much longer? I'm not so sure about that. But I will likely hold the Honest shares I have in my other Fidelity account for now. Here's what I need to see. I need to see this next quarter they report margins going up and those losses cut down substantially. If I see that, I will stay invested in the stock and I will hold. And then if I see that again the following quarter where more margin improvements and losses cut down again, then I'll start feeling really good about Honest and it'll get out of the penalty box. But for now, it's definitely in the penalty box. If I do not see improvements in margins and profitability in quite a substantial way next quarter, I will pull the plug and I will sell out the rest of my shares of this stock, which is not ideal. But at the end of the day, if you're dealing with a stock that just continues to disappoint, at some point you got to say, this just wasn't the one and I need to move on, right? So that was certainly the decision we had to make with the chef back in the, when was that? End of last year, beginning of this year, whatever, right? Had to move on. And with Honest, we'll see. We'll see. It's, they better come through with the numbers or I'll be gone out of this stock completely, okay? So that's a deal, okay? Now, where did I go ahead and put that money? And because here's the deal, okay? I'm always going to have a certain amount of money invested into big dog companies like, Metas and Teslas and those sorts of companies, that Amazons that you don't really have to even think twice about, and great dividend companies and things like that, right? Super profitable companies. But I'm always going to have a certain allocation to those sorts of like 10x, 20x type opportunities, right? And so this Honest money is in that category. But the problem is Honest has a much bigger risk, in my opinion, and much less of a reward potential than this other stock. So if I'm going to allocate a certain amount of my portfolio to that certain type of 10x, 20x opportunity, it needs to be in that sort of company, okay? And so there is one company that I do feel has that much better risk reward, and it is Fubo. Here's the deal. I put that money in Fubo here today, bought 15,000 shares in the public count of Fubo, right? Here's the deal with Fubo. It's a complete opposite situation of Honest, where their margins are improving dramatically and their losses are being cut down in a massive, epic way, okay? Here's the deal. Look at this. This is last year versus this year, okay? Basically, if you go back last year, their subscription revenue was less than their subscriber-related expenses, okay? Which means you have negative gross margins at the end of the day. Now, they flipped that very recently, and I see no reason why this isn't going to continue and why these, let's just call it, the margins are going to continue to improve dramatically over this next several years, to be quite honest, on a year-over-year basis. In this latest quarter, $288 million in subscription revenue and $270 million in subscriber-related expenses, okay? So there's a flipping happening here at Fubo that's looking pretty good, okay? As far as their operating loss, they cut down on that substantially. It was 91 million in the same quarter last year. They cut that down to 52 million. I see no reason why those operating losses aren't going to continue to be cut down and cut down and cut down substantially for future quarters and future years, and they'll get to profitability, right? Net loss came in at $49 million. That's versus $116 million in the same quarter last year. So here we have Fubo, which is a very different scenario than Honest, right? Margins increasing dramatically, losses being cut down dramatically. Not like, oh, there's a little improvement. This is insane improvement on just a year-over-year basis, okay? If they keep pounding out this type of improvement, profitability will come much sooner than really anybody's anticipating at this moment, right? Then we go into David Gandler, which seems, I've never seen David Gandler post some BS on social media in terms of like something that doesn't have to do with Fubo. If David Gandler's ever posting on social media, it's about Fubo and what's going on with Fubo and what he's excited about and what the company's up to and what they're doing and things like that, okay? This man, there's no question, like his focus is on Fubo and growing this company into a giant over time. And he has a tremendous amount of experience in the industry over time when you kind of look into his background and whatnot, right? And you got a guy here that's putting together deals where like Spectrum, one of the biggest cable companies in the world, was literally going out of their way to funnel customers over to Fubo, which was their preferred streaming partner, right? I mean, they were sending emails to their customers. They were even sending text messages to their customers. Like, holy smokes, this is no joke. Imagine that's pretty going out of your way, right? So you got Gandler here that's just extremely focused on Fubo. I love that, okay? Their Google Trends looks like it's going to be by far and away the biggest we've ever seen in the company's history in the month of September, and it's not even going to be close from what it looks like here, okay? So, which means they're attracting dramatically more subscribers than probably the company was anticipating and than honestly anybody on Wall Street's anticipating either. So which means they should likely come in with subscriber numbers over this next several quarters that is pretty shocking that no one really anticipated. And so that's a pretty fascinating situation we have here. Now why does that matter so much? Well, if their subscriber numbers are going to come in so much better likely than anticipated, guess what? Their revenue for next quarter, which is the December quarter and the March quarter of 2024, is likely going to come in much better than anticipated. Remember, if you're attracting tens of thousands more customers, or let's say, dare I say, hundreds of thousands of more customers than anticipated, and your plans are ranging from anywhere from like $75 to $100, that adds up to big money. And that could add up to massive beats on revenue. So here in the very short term, don't be surprised at all if they guide for a much higher revenue over the next several quarters, to be quite frank. And if they do that, don't be surprised if they bring down their losses quite considerably in the December quarter and the March quarter as well. Because at the end of the day, more subscribers is going to likely mean much more subscription revenue, right? Which could mean margins going up considerably. And it's also going to likely mean more advertising dollars as Fubo's a much bigger player and they have a lot more customers out there, right? So that's a fascinating situation that we have with Fubo, right? Now look a little bit longer term here. So let's think about really 2024 in general, right? Well, if they're attracting way more subscribers than anticipated, that likely means their 2024 subscription numbers are going to be way higher than anybody anticipates. And basically, analysts had this company growing about 21% next year. I wouldn't be surprised at all if that number's low. Remember, the company doesn't just get subscription revenue, but they also have their advertising business, which is starting to likely going to ramp up in quite a considerable way over this next several quarters. And in 2024, guess what we have? Some people might not be looking forward to this, but it's about to be political season, which means massive spend on politics, right? Now, keep in mind, Fubo is really known for two things: sports and also news. They actually have a tremendous amount of the news channels that everybody likes, right? Well, you got to understand, with local elections, these elections can be won by sometimes hundreds of votes or thousands of votes. And so Fubo knows exactly where people are watching this content at, right? They know the zip codes. They know pretty much literally exactly where you're watching that programming from, right? Which makes it one of the best, most valuable ways you can possibly advertise to folks out there, where you have their attention because they're watching a football game, right? And you have their undivided attention and you're showing them a political related commercial, right? So that's an ideal situation. So don't be surprised if the ad spend goes insane. And I remember even in this past quarter, they had mentioned around ad spend where essentially they were seeing more money on the books through the first few days of August than they saw in all of July. Like, that's crazy to think about. And remember, we're not even into political season yet. That's all coming in really at the end of this year, but especially in 2024. So don't be surprised if their revenue numbers are far exceeding what really, let's just call it, analysts are expecting, Wall Street's expecting, or even what maybe the company's expecting for next year, right? Now, if that happens, guess what? The losses are going to likely be far less than what anybody's anticipating, right? Which, if this company comes in much better in terms of profitability than anybody anticipates for next year, then that basically means 2025 is in the bag for profitability. And then you can start to talk about how big the profits will be longer term, right? So that's where Fubo sets up so great in the short term and for the long term. It's a great short-term setup because they're likely going to come in with subscriber beats, revenue beats, and bottom line numbers that are going to be far better in the December quarter, March quarter than anybody anticipated going into political season for 24, right? And then you talk about profitability for 2025 and beyond and the ramp of profitability. Then you're talking about a whole different valuation, obviously, you're running on Fubo at that point in time, right? Which is enormous. Now, if you're wondering, the stock's climbed a lot, right? It's up 136%. In the past 6 months, but let's be honest, okay? People were pricing the stock at the beginning of this year like for bankruptcy. That's kind of what this got thrown into, right? And people are like now starting to wake up to the realization that margins are improving epically, not small, epically. Bottom line's improving epically, and they're one of the stickiest customer bases you could possibly imagine. Like if somebody signs up for Fubo, they're keeping Fubo. It's literally one of the stickiest customer bases you can find out there. The data's around this, okay? And so that's why this stock has climbed 136% or let's call it in the past 6 months. And I honestly don't think Fubo is going to slow down anytime soon in the short term because the short-term setup for Fubo is ridiculous. The long-term setup for Fubo is ridiculous. So for me, and kind of looking at this, Honest versus Fubo for this next several years, it's just the risk-reward profile for a riskier stock. It's just so enormously bigger in something like a Fubo versus an Honest, okay? We'll see how it all shakes out over time, but I'm willing to take that risk. I'm willing to take that risk in Fubo. And I think it's going to pay off very handsomely. I think it's going to be a huge winner. It might not be. But you got to ask yourself, is the data headed in the right direction? Are the numbers headed in the right direction? Absolutely. Everything is headed in the right direction on the financial front. You can't argue anything against this. The loss is being cut down in the biggest way of probably any public company in the world. Margins improving massively. Revenue flying in. Subscribers flying in. And the longer term setup there is so attractive. And also, David Gandler, this man must have a crystal ball. Because I've listened to him for the past year or so. Every prediction he's made is coming true. In terms of the media industry, the consolidation, in terms of bundle packages still being the play, but the streaming players being most well positioned for that. Everything he's been talking about is coming to fruition. The Charter Disney situation, like he's calling all this stuff way ahead of time. And that just shows me that this man knows what's going on in the industry, and he's positioning Fubo to be such a big beneficiary in the situation and much bigger than anybody's anticipating. And that, the stock's a $2 stock. I don't think it'll be a $2 stock forever. So what am I willing to risk 40K on? Honest or Fubo? I mean, there's no debate that Fubo is the better risk-reward profile for my $40,000 or so I have in the public account in relation to this particular stock out of a $1.8 million portfolio, okay? That's why I made the move. Serious video. I appreciate you joining me. Thanks so much for being here, folks. I appreciate y'all. We'll see where it all shakes out. It's going to be a fun time. Much love and have a great day.